Now, as a very fast forward revision for the VAT. VAT is an indirect tax. VAT is an indirect tax. The rate of VAT is 20%. The rate for VAT is 20%. Is fixed percentage. Now, sometimes the values are given to you gross. Sometimes values are given to you net. From gross, if we are going to compute tax amount, yani VAT amount, we will use the fraction 20 over 120. For example, if sale is 10,000 gross, yani 10,000 tax inclusive amount, in order to find out the tax amount, we will do 10,000 multiplied by 20 over 120. Then we will get the tax amount. Second, if the amount is given to you as tax exclusive, yani net amount, then what you will do, you will going to use fraction 20 over 100, yani just compute 20%. Yani if you are going to calculate VAT, yani tax from net amount, just apply percentage 20%, you will get your answer. Khalas. Second, in your previous studies of FA1, FA2 or F3, you guys learned that there are two types of VAT. One, if you are selling, you have to pay output tax. You have to pay output tax to Hukuma, to the government. Yani output tax applies when you are selling goods or you are rendering services, and that is payable to government. Khalas. Second, if you are purchasing goods, if you are acquiring goods or services, remember, purchasing goods, okay, incurring expenses also, yes, and purchasing of non-current assets as well, input tax will trigger. Yani you are going to recover, you are going to claim input tax, not limited to the event of purchases. If you are incurring expense, you are going to claim input tax. If you are going to buy a non-current asset, you are going to claim input tax. If you are purchasing goods or services, you are going to claim input tax. Claim input tax means you are going to say, HMRC, return me, it's my receivable. Output tax is your payable. At the event of sale, you have to pay to HMRC. Input tax, your claimable, recoverable, receivable, which is in the event of purchases of goods, incurring of expense, or purchase of any non-current asset. That is simple definition, what you can call for VAT input and output, and inclusive and exclusive. Anything. In TX, we have three types of supplies. Number one, standard rated supplies. Number two, zero rated. And number three, exempt supplies. Standard rated supplies are those supplies, if we are purchasing, we are going to claim HMRC return, HMRC give me my input tax back. Yani in the event of purchases, we are going to claim input tax, while and as well as at the event of sale, we are going to pay output tax. Standard rated purchases means input and output both are applicable at the rate of 20%. Khalas. There are second type. There is a second type which is zero rated. Zero rated means input and output, there is going to be input, and if you are dealing with zero rated supplies, there is a list of zero rated supplies in my handout. If you are dealing with zero rated supplies and you are buying them, you are acquiring, you are purchasing zero rated items, listen, remember, you are going to claim input tax. But if you are trading, you are selling the zero rated items, there is no output tax. Wow, the most beneficial trade in UK, in Pakistan, in India is for the items which are zero rated. Why? Because you can claim input while you are purchasing the goods, but no output, zero, zero, no output in the event of supply, in the event of sale of zero rated items. And at last, we have exempt goods. Exempt goods are those goods no input, no output. No input, no output. Mafi. If you are buying, no input is going to be claimed. If you are selling, no output have to be paid. Mafi. No input, no output. Remember, for the standard rated, for zero rated, if you want to claim, if you would like to recover your input, you have to register. For standard rated, for zero rated, in order to claim the input, you must be a registered trader. You must have VAT code. But exempt, you are exempt. You are a dealer who is dealing with exempt goods. No need to register. No need to register. Yani registration is exempt for the exempt dealer. Upper trader who is dealing with exempt goods, no need to register, because he is not going to claim any input, so no need to register, because registration is a burden. Registration, you have to submit your VAT returns. Tax administration cost is there. If you are late in your returns, you have to pay penalties, you have to incur, the government will ask fines from you. So please remember that. Exempt, no need to register. For zero rated and standard, if you would like to claim input, you have to register. But there is a condition as well, that voluntary registration, what I was saying about voluntary, it was voluntary, that if you would like to claim input, you have to be registered, and that registration which you are doing by your own is known as voluntary registration. Why a person will suffer the tax burden? Because he likes to recover input tax. But there is a rule as well, that if your turnover means sales, if your this turnover includes the standard rated and zero rated, the sum of standard rated and zero rated supplies, sales of standard rated plus sales of zero rated supplies, exempt will not come here. Non-current asset purchase, non-current asset trade will not come here. Okay, if your turnover is 85,000 or above, government is saying now it's not your choice, now it's mandatory. You have to register. If your turnover is below 85 and would you like to claim your input tax, you must register. But if once your turnover reached 85,000, khalas, you must register. That is compulsory. Now, compulsory registration have two tests. Number one is historic test, number two is future test. Historical test is going to look your previous 12 months. If within previous 12 months your turnover is 85 or above, you have to do compulsory registration. This 85,000, we will look only for the goods. We are not going to look for non-current assets. We are not going to look for the value of non-current assets. We are going to check only the value of goods for registration test, which is historic test. Previous 12 months. If your turnover is above 85,000, you must register for VAT. But on contrary, there is a future test. Future test means if your budget suggesting that next month, 30 days, next month your turnover is going to be 85,000. Now in future test is per month, in historic test is per annum, 12 months. Future test, if within next 12 months your turnover is going to be 85 or more, you have to be registered. Sir, while we are solving questions, we are doing kit, we are facing a problem. Okay, what is the problem? The problem is, sir, we are assuming is a future test, but when we are checking the answer from the back, from the kit, from the study hub, it's historic test. What is this? Sir, what's the hint? So the answer is 99% there is historic test. By default, you guys must apply historic test. Why? I am saying that's why. That's a rule, bhai. If the previous data is given to you, it's a historic test. 12 months, previous 12 months. If the data of the past year data, past period data is given to you, don't see that the business commenced or the business just started. Khalli walli baba. If the past data is given to you, apply historic test. Khalas. And if past data is not given to you and they are giving you budget, they are giving you forecast for the next month, then only you apply the future test in the paper. Otherwise the mistake will be there, you guys will make it wrong. So what you will do, by default, try hard to apply historic test, because normally, generally, the past data is going to be given to you in the paper. If 12 months data is available, apply the historic test. Future test only if the forecast figure is going to be given to you. That's how the historic test and future test going to be applied. Now there are some other rules. Notified date, date of registration, both tests have different notification date, different liable date, and different date of registration, which is a bit tricky, which we need to see the questions, we need to have the questions, we need to solve the question to understand. So guys, I just tried to summarize some important points about registration and the basics of VAT in this short video of around 12 to 13 minutes. I hope it's going to help you. Remember me in your prayers, and if my videos are helpful for you, please share and subscribe the channel. Thank you.